What are exemptions from taxation? Well, generally this comes in three categories. The first category that I want to talk to you about is exempt income. Well, what you see here is a long list of different things that would generally constitute income to an individual, but would be considered exempt for taxation purposes. To start with, nonprofits. Nonprofits get an authorization or certification from the federal government and a similar certification from state governments, where certain activities that they carry on that generates income is not subject to taxation. Okay, employee educational assistance. This is an employment benefit that again would seem like it was compensation from the employer, but has been exempted from income. Adoption benefits, once again, this is a benefit or a perk with employment that otherwise is not subject to taxation. Child support, that is funds received for support of a dependent child, is not subject to taxation. Foster care payments, if you are a foster parent and you're taking care of foster children. Proceeds from a life insurance policy is not subject to taxation when that policy vests or when the payment is made. Bankruptcy debt forgiveness. Interestingly, forgiveness of debt in so many situations is taxed as income to an individual, but in situations where it results from a bankruptcy proceeding, it is not considered income. Energy conservation subsidies, that is payments related to the conservation efforts for certain types of energy or fossil fuel sources, once again, is oftentimes exempt from taxation as income. Gifts received from others is not income. Any return from a municipal bond. So many investments throw off interest or dividends or other forms of accrual of benefits. Well, municipal bonds is a class of investment whereby the payments on the bonds that the bondholder receives is not subject to federal income taxation, where it may be subject to state taxation depending. Inheritance is not taxable to the individual. A large estate may be subject to estate taxes, but an individual receiving from an estate is not. In disaster relief payments, once again, this generally comes from FEMA or other state-related organization, are exempt from consideration as income and thus not taxable. And then Roth IRAs. This is a very common form of investment instrument that's used to put money into the investment vehicle so that it earns interest or rises in value over time. And then ultimately, when those accruals are withdrawn from the IRA account, they are not taxed at that time. So you put in post-tax money, that is money you've already paid taxes on it, and the value of the holdings rise tax-free. Okay, so all of these are exempt forms of income. Deductions is another category. It is a form of, I would say, expense, if you will. It is an obligation of payment that an individual or business incurs, whereby the government has said anything paid towards this type of expense, or even if not fully paid, but the expense is incurred, that this type of expense should offset income. So you deduct or reduce your income by the amount of these costs. An example of a deduction would be, say, the amount of interest that you are required to pay on a student loan or on a mortgage on a primary residence. These would be amounts that you would reduce your income in order to get to an adjusted gross income that is subject to taxation. And then finally, credits. The government authorizes specific credits against the amount of taxes owed on income. So while you incur a certain amount of taxation based upon your adjusted gross income, if you are entitled or able to use a credit, the actual tax dollar amount that you owe on that income is reduced by the credit. A normal credit will reduce any tax liability owed. A refundable credit would actually pay you back if you had no tax liability to the government. So we call that an affirmative credit. So with that being said, there are numerous categories of income and methods of reducing income that would allow any revenue received to be exempt from taxation.